You have gold, the risk-off hedge for volatility, acting like your everyday coin. Oh, I can't say that anymore. Like your poop coin. Sorry about that, Corbin CEO. My apologies, sir. Video editors, bleep that out, please. You can put a little poop emoji over my face. I would just like to pat myself on the back just a little bit here, because on Friday, before this historic move started, I wrote in my weekly newsletter something that I think came true a lot faster than I thought. But again, Graham is showing you this. I felt like gold was starting to act like a very volatile asset, like Bitcoin, like I don't know, some of these crypto coins. And so I wrote this newsletter, tongue-in-cheek, called "I'm the Volatile Asset Now," with this, I thought, funny AI-generated image of a bar of gold doing the "look at me" meme. And then, like hours later, it performed like Bitcoin, which is wild. Now, I just like to say that we were talking about this the pre-show. When a meme coin or a low liquidity, low market cap coin is very volatile, you go, oh yeah, of course, no problem. What's there to be? That's normal. But when you have one of the biggest assets in the world, the asset that supposedly is the risk-off hedge and has low volatility, the asset that the narrative will tell you every central bank and major institution is plowing into. When you have these big moves in the sizes that we're talking about, trillions of dollars, this is not to say the trade is over, but at the very, very, very least, you kind of have to take a step back and figure out what is going on. Because this is not driven, I don't think, by retail. Like the sizes are too big for that to happen, right? So what's happening? Like what is going on, right? So let's get into that. There are lots. There's okay.
Is it Epstein?
most definitely Epstein has something to do with it, I'm sure. I think his island was made out of gold. But here's a related, well, not related, but I think an equally ridiculous explanation, which some have pointed out, is U.S. President Donald Trump announced that Kevin Warsh will be the next federal chair. We'll talk about that briefly later. But many are saying that this is the proximate cause for gold and silver to sell off like that. I think that's patently ridiculous, right? And I'm not the only one. Goldbug Peter Schiff disagrees as well. He says, quote, "The crash in gold and silver today has nothing to do with Trump's nomination of Kevin Warsh for the Fed chair. If Trump thought Warsh was going to be a hawk, he would not have picked him." Others agree that Warsh's nomination had nothing to do with the move. Peter Hahn, a seasoned market analyst, stated that the unprecedented sell-off might be the result of a market manipulation scheme. So this is definitely not related to, or he believes this is also not related to the announcement.
Well, anyone in the gold bug circles will know of the many conspiracies relating to the suppression over decades of the price of gold, right? That this is like, it's basically taken as a truth, actually, isn't it, at this point, that the price of gold has been manipulated
I don't
over
take it
decades.
As truth. I don't take it as truth. I think that's ridiculous, but that's just me.
It's a widely discussed talking point amongst like hard money advocates, especially gold bugs.
You know what that's called by everybody else? Cope. When the thing that you think is precious isn't responding in the way that you think it should be, you entertain cope to relieve your psychological anguish of reality not matching what you perceive the world to be.
Okay, well, continuing on the cope trend or cope theme, David, you seem to be suggesting that it's all over for gold here.
No.
And good riddance.
Oh,
basically.
No.
But could it just be a correction, just a natural market correction? I mean, look at this chart. Like, it's parabolic. We had a correction in October from 4,500 down to 3,800.
It definitely
It went even more parabolic. It looks kind of like a healthy correction, actually.
Yeah.
Chart
No,
wise.
I agree, but like I said, the difference is like remember let's analogize this to just crypto because I think it's a little easier to work with the numbers. When you see like your meme coins on Pump.fun do this kind of thing, you're like, oh yeah, it could like 10x from here, right? No problem.
Yeah.
But when you see Bitcoin do this kind of thing, right?
Yeah.
You're like, well, okay, so for it to 1x from like we're just talking about Bitcoin at $100,000 a Bitcoin, for it to 2x to 200,000, the amount of money that has to go into that is just kind of it's not the same, right? Now we're talking about gold. We're talking about trillions of dollars, right?
Yeah.
So obviously, as the asset gets bigger and bigger, it just starts behaving differently, right? And then when you see like one of the biggest assets in the world start to have this kind of volatility, at the very least, that's all I'm saying. At the very least, you have to kind of be like, well, okay, this could be a correction and it could go up again. But think about the amount of money we're talking about, right? To make it go up again. And why suddenly did this kind of evaporate in like a couple hours? And you can't just write it off as like, oh, well, it's just acting like a poop coin. No. The amount of money involved makes it act differently, I think. It should make it act differently.
Okay.
At the very least.
I mean, why have precious metals gone parabolic over the last couple of months here, and why have they risen steadily over the last few years? People will say it's the debasement trade, it's the growing geopolitical uncertainty, the tendency for the U.S. dollar, the long-term trend of the U.S. dollar being less dominant. All of those factors are driving and maybe valuations in equities are too high. These are all factors which are people point to for why precious metals have ripped. Okay, and then that narrative, all those narratives have combined to convince market participants that yes, this is the trade. So they all lever up. Everybody gets in the trade. It starts to go parabolic, and then somebody gets antsy and they sell. They're like, well, this move is overheated. Somebody does that. Somebody else does that. And then it cascades very quickly, right?
But
everybody's like, the smart money is like, I'm going to sell. And then you see these massive corrections. It finds equilibrium here. And then who knows what's going to happen next? It very well, all those narratives are still in play until they're not, right? Until suddenly, maybe like, as we would talk about a lot, right? Like narrative leads price leads narrative. Sorry. So now that the price is down, the narrative could shift. Oh no, gold's no longer the debasement trade. It's a volatile coin.
But Graham, again, I think you're thinking of it. So you said someone sells. Who? Retail? Do they have enough money to move gold like this?
No, it's not retail. It's like some institution just looks at the chart. They got in, at $3,000 or like $4,000, let's say in October or whatever. Yeah. And they're like, this move has gone up too much too fast. Obviously, I'm going to take profits here. And then more people do that. And then all it takes is a few people to take profits.
Not people,
players to take
institutions.
Profits. Institutions, big players to take profits. And then it starts to slip. And then all the other like algorithms and like stop losses get like triggered. And it goes, you get these correction, right?
Yeah, correction. I think
this correction, though, it does have run the risk of like ruining the narrative that precious metals are like the way to go, because people get burnt, and then it's like, well, and then people start pointing out all the charts. Look at what happened the other times in the 80s and whatever. Like the other precious metal bubbles. You saw these parabolic moves, and then you had like a decade long bear market.
Yeah, I mean, I again, I think you need to. I think language here actually is important because you're not talking about. I just don't see retail having that much of an effect on this.
I'm not saying they are.
And so, well, the point is that the people who probably caused, not the people. See, there I did it. The players that probably precipitated this. Well, they're organizations. It's like multiple. It's like not one person who's like sell. Anyway, these players sophisticated players. I just wonder, is this like a classic flush, take profits, and then let the price run up again by people who want to buy the dip and kind of push it up again? My worry, or the thing that I would be cautious about, is so they just triggered this massive thing. So then they let it run up again a little bit, and then they sell more, right? Because they're still massively in profit, right? Like,
exactly.
And the thing is,
or they're buying back in at these lower levels, right? They get the smart money, sells near the top, that starts the cascade.
But
now that the smart money has dry powder, if they're still like bullish on the narrative that like the debasement trade narrative or whatever, then now they see, okay, the correction has been made. It's less over its skis now. I'm going to redeploy that capital.
And but who has the liquidity to? So if you're talking about an
people
institution,
the institutions who just sold the top.
No. Who has the capital to buy the amount of money that the institutions have? You think it's retail?
You think I'm retail? Saying the institutions sold the top.
I get what you're saying, but this is what I'm saying is, so the institutions, they just made a butt ton of money, okay? Yeah, exactly. And they want to put that money into the market.
Yeah.
Who's going to buy this? The other institutions are the only ones who have the capital to absorb.
The institute buy what?
So someone has sell the gold to the institutions.
Well, that's why the price could easily bounce right back.
Yeah, but then why would the institutions buy into thin liquidity?
Well, some will. Like, if someone sold the Pico top and they just saw, like, okay, this is a technical chance to sell, okay? But they're still secularly bullish on the trend, right? The narrative, okay? Now it's the price is more reasonable. So some participants can buy back in at this price, and because, as you say, there might not be that many, there's less people willing to sell. It can cause the bounce to be significant.
Yeah, but okay, so let's look at it in Bitcoin terms, because I think that makes it clear. Let's say an institution wanted to put $1 trillion into Bitcoin. They could do that. It would make the price retarded, though, and it wouldn't work, and they would never do anything as stupid. Gold is kind of like that. Like, the people who are going to, if the institutions are the ones with the biggest amount of money, trillions of dollars or whatever, and they want to buy gold, but they're the ones who have all the gold to begin with, right? The retail is going to be a smaller section of that. Then other institutions would basically be selling to other institutions, and then I think institutions would be happy to do that. Is what I'm saying. Is they're like, yeah, please buy my gold. Because they want to get out, maybe, right? That's what I don't know, but I wonder if they're just going to slowly bleed out this thing. Anyway, I'm not trying to be doom and gloom here, but I would be, at the very least, I think you have to be cautious to see what happens, right?
Of course, but clearly. The run up in precious metals over the last couple of weeks was getting out of hand.
Overheated, for sure.
Was that the euphoric Pico top? Still unclear. It all depends. That's why what it really it depends what happens here on Monday. Do we and does the narrative shift?
Yeah.
Is it oh, that was what were we thinking? There's not really a debasement trade. There's not really geopolitical uncertainty. Things are okay. All the reasons people were like talking about buying precious metals or supply crunch and blah blah blah. There's those paper claims on all the precious metals. All of those things have to sort of disappear now for this thing for it to be over.
Yeah.
It could easily come roaring back. That's what I'm saying.
Well, I see. That's where I think. Again, I'm not smart enough to know this. That's where I think this is not a narrative. Potentially, it's like it reminds me of like when Bitcoin in the 21, 22, it got to a certain price, and then just there wasn't enough liquidity in the entire system to push it higher. It just wasn't there, and it didn't matter if the narrative was whatever. It just didn't matter. There was not enough liquidity to make the price of Bitcoin go higher because that was as high as any retail person could get it. That was it. There was nothing else. There was no juice left in the thing. And you look at the market cap of gold. I mean, the amount of run up in this is still massive. And then I think all retail combined, every retail person that has money to spend, if they plowed into it, I mean, is it $1 trillion worth of demand? I mean, I don't know. I don't think so. I don't know. It just seems...
Yeah, well, I will say that you do hear a lot of people. I have heard a lot of people over the last few weeks saying they missed the gold trade, but they think the narrative is strong, so they're waiting for a major pullback. And so you could imagine that those people might deploy here. Okay,
exactly. And institutions sell it to them.
Yeah.
They sell it into like thin liquidity, right? Thinning
we saw
liquidity.
We saw a blow off top in gold in October, and it sold off like kind of a very similar amount relatively, and then we have a second blow off top. So is there a third?
Yeah. Again, like with Bitcoin, like corrections are normal. Right?
Yeah.
In a bull run, you have a 20-30% correction is normal until it reaches a point where there's just no more liquidity left to push it higher, right?
Yeah.
I don't know where that is, but when you have 7 trillion annihilated in one day, even for an asset like gold, that's a lot of money, or that's a lot of market cap, you know?